All right, guys, how you doing? It's Weston Means with eXp Realty here in the San Francisco Bay once again. Today, I'm here with a past client of mine. His name is Ivan Fung. He works for a Fortune 500 company as a financial advisor. That's right. Not just any advisor, financial advisor. How you doing today, man?
Oh, I'm very good.
Yeah. So today we're going to talk about aspects of finance, right? You're a financial advisor, so this is what you specialize in. We were talking before the podcast a little bit and thinking maybe we could go into some of the ways that people can plan to purchase real estate. Obviously, I'm in real estate. I'm a real estate agent in the San Francisco Bay. And so I help my clients every day, purchase properties as either an investment or a primary residence. Sometimes you can also move into a primary residence and rent out an additional unit or two, depending on if it's a 2-unit building or a triplex or a fourplex. So there's a lot of different things you could do. What do you really recommend your clients do when it comes to real estate?
Oh, I'm a big fan of real estate property investment. So I always tell people that you always want to buy real estate, for you to live, purchase a home, and also in terms of investment, it's a very tangible asset that you can see it. You gotta think about how you're gonna manage your buildings and rent, things like that. And one thing that I do tell my clients that before you actually get into the property, you might want to start thinking about financial planning. Now, everyone will talk about they want to buy properties, they want to buy more their own homes or so. But I found out a lot of people don't really quite succeed, or they just end up not meeting the goal on time. And then one of the things that it's kind of hard to see where you start. You talk to a financial advisor or a banker or a real estate agent in Winston. When that happens, it's more like you're asking for the chicken. What comes first, the chicken or the eggs, right? So first, when I purchased home with Winston, what I did is at first I told Winston what I'm looking for.
How can we narrow that down? This is a big hurdle that a lot of buyers, when they're first getting started in the Bay Area, well, actually anywhere, it's something that has to be worked out. Is like, okay, what are actually the areas that are really good for me based on my needs? What are the top 5 things that I really need? Is it like the school district? Is it proximity to public transportation? Is it, am I a foodie? Do I want to be close to like restaurants and stuff like that? So it really depends. It's a process that's tailored to each person. But I find surprisingly that a lot of my clients can actually use quite a bit of guidance on that, because they don't actually know right off the bat what exactly to look for, or even to really try to understand what they're really looking for. What are your actual preferences? You may not have even been asked what matters to you most in the home that you're moving into. So these are a lot of things you need to think about. That's why, as Ivan said, maybe connecting with a real estate agent first is definitely a viable option. You can narrow down what areas are most suited to what exactly you're looking for, what your preferences are. And then from there, you can get an idea of what the average price point is in that area. And then you can start getting into the financials. And that's when maybe you engage like a financial advisor or someone of that stature.
So based on these criteria that Winston just pointed out, we also want to see how realistic the goals is. I mean, we all want to have a good school district. If you plan to have a family, you also want to be, close where everything is. But how much is it? How realistic it is for you to afford. So one of the things that I do is that once I know the criteria, for me, it was basically, hey, do I want to buy a condo, townhouse, or a single family home? Then I go back to my drawing board. And before I go into my drawing board, I will ask Weston, hey, these are the things I'm looking for. Is there any inventory available? What are the areas that we're looking at? Then he'll give me like a price point. Then I went back to my drawing board, and I will see how realistic it is. What is my financial situation? So with that, I will advise people to think about maybe have a 3 to 5 year plan, and 5 to 3 years. If I realize I couldn't afford something that I want, I will have that enough time for me to save or invest on something, so I can actually try to reach that goal. Maybe I need to get another job. In the meantime, I'm trying to get down payment. Maybe I need to change my financial status, or I need to talk to either my partner or my family that can I get any help? So from my drawing board, I want to see what's available to me, and usually every 3 to 5 years, let's say that people will actually make a huge dramatic changes in their finance. On the average, people will do about refinancing, or when they make a little bit more, they want to change their house. Average about 3 to 5 years. So that's something to think about when you're looking for a house. You don't want to give those criteria to Weston, and when Weston point out all these great areas, you see those property, you love it, man. You are so happy, but you realize that you cannot afford it. So now you waste your time and emotionally damaged that, oh man. And I couldn't realize that they spent all that time, they could not really afford that area. So that's something that will help you save time and money as well.
That's really funny that you bring that up, because this is something that I actually run into a lot in my field. Is like, I'll meet a client and they're like, oh, I'm dead set on this area, love this area. And my first question is always like, are you sure you can afford the area? What's your idea of like, what type of payment can you handle? What type of price range do you think you can handle? And a lot of times clients will have some kind of number in their mind. And then my next question is usually, okay, how did you come up with that number? And most times it's an estimate based on, they've looked up online, like, okay, what's the average rates right now? There's so many different factors that are factored into it. It's not just the interest rate. How much is the taxes going to be in that county? What are the county taxes? Like taxes go up and down. What's the insurance? Things like that. So these are all factors that you would actually need to talk to a mortgage advisor, or a financial advisor who can look at all the numbers to really give you an actual good estimate of what your real price range is. Because earlier in my career, I would go out with people and I'm like, okay, you're not pre-approved, but I want to deepen my relationship with you. So I'll take you to see homes. But a lot of times we were going to see homes that weren't even in that person's actual price range.
Happens a lot, actually.
And that happened to me a lot earlier in my career. Now I'm to a point where I'm like, I don't necessarily want to waste a lot of time going to places that you're not even going to be able to afford, because it's not only a waste of my time, it's a waste of your time as well. And as a real estate advisor, I want to be mindful of your time and direct you towards places that you can actually afford, so you don't go through the emotional damage, as he had just said, of seeing a place, falling in love, and ultimately figuring out that you can't afford that place.
Actually, let me ask you a question, Weston. So in your experience, when you take clients, how long for is them to take to actually purchase the house?
Man, that really varies.
What is the range, like 6 month, 3 year, 5 year?
Dang.
On the average?
Wow. Well, I think with you, I met you at an open house, and from like the day I met you to the point where you actually bought a house, I think it was
a couple years.
More, like 2 years or something. Something like 2 years, and that's not even the longest one. Like a couple I'm working with right now, I met them like 4 years ago. I think it was 2020. And now we're finally going out to like start seeing homes, and they're pre-approved now. So it's like, it could be any time frame, really. It just depends on whether that client is actually ready when they meet you, or they're just like looking around on Zillow and like, oh, this place looks cool, but I don't actually know what my financial situation is and things like that.
So I do want to add that, because giving that kind of time frame is that why I do recommend leading about 3 to 5 year planning at minimum, because let's say you have bad credit, you need time to take care of that misunderstanding, okay? Also, there's a lot of things that you might think about. Things happen, you might change your career. Things start, changing life. You might have a little accident that you might need the money to take care of your medical bill, or you might got a promotion. Now you're, rather than thinking about buying a condo, you think about buying a single family home. So things happen in life. So 3 to 5 years seems like a really minimum, seems like a reasonable start. But for me, just ask that question. Things happen in the market. So I remember when I was talking to Weston, right? When I was thinking about buying a condo, he gave me this price. But I know that having all these data, especially in the Bay Area, usually home beat a lot of these indexes like the S&P and also the NASDAQ. So while you're saving that money, you also want to think about, while I'm saving this money, where should I park my money while it's being saved? Is it a good time to put in investment or somewhere in a higher interest so you're ready to buy a house? What will the bank say if you do certain investment? That's something that a financial advisor and a mortgage advisor will able to help you on that. And giving that time, knowing that how much money that you will have in asset, you will think, are you really close to buying a house? Should you liquidate some of them? What are the tax consequences if you do that? Or do those financial institutes are able to use some of your equity as a collateral? That's something that you also want to consider as too. What kind of service that like the financial advisor and the mortgage advisor can help you provide. So you have that 3 to 5 year to really plan. Yeah, right.
Yeah. I mean, that's a fact. Like, something that kind of like resonated with me that Ivan was saying is it's good to set goals. What are your financial goals? Do you want to retire at a certain age? Do you want to buy a place in this neighborhood at a certain time? And then taking that goal and then building the steps beneath that to get you to the goal. What I notice a lot of people do is they just kind of like go with the wind. They don't really have a financial plan. They're just going with the flow. This is how much money I make, and this is like, yeah, at some point in the future I want to like buy a home, but there's no real deadline or anything like that. And so when you don't have any deadlines, you just keep going with the flow, and then you may get to that goal, you may not, but the problem is you have never sat down and really just like thought about, let's say my goal is I want to get into a home in Alameda in 5 years. And then you start building the steps and talking with someone who can really analyze your financial picture and come up with action items for you to execute so you can get to that goal in that time frame.
I totally agree with Weston. I do know someone that I personally is that they're talking about buying a house, but when the market was going down, they're like, oh, I think it can go lower. Still haven't put an offer to buy a house. When the markets go up, they're coming in, well, things will keep going up. It's too expensive. I don't want to buy. So, people tend to overthink it, or they don't have a designated plan. But you keep thinking about this way. A lot of housing prices, you can be priced out or not able to afford if you waited too long.
That's right.
And another thing is that when I was buying a house with Weston is that when Weston told me, like, these are the market, this is what you're looking for, and these are the price range. I also think about, as of right now, if I want to buy a house, let's just say $1 million, what is that, if I were to plan to save money for the next 3 to 5 years, what is that price like in 3 to 5 years?
I said before, if you don't have a plan, then you're just going to go with the flow. And then when it comes to actually execute, you're going to be like, oh, well, my goal was to get a home in Alameda. This is year 5, but now I need way more for a down payment, or now the interest rate is something different, and now I can't afford to live in Alameda. Maybe I've been priced out because I haven't been promoted at work, or maybe like, I wasn't able to get that new job, or whatever it is. So it's just really important to have that plan in place so that you can really work up towards it. And so, thank you. You mentioned earlier that Bay Area home prices have been beating a lot of indexes out there. Is it all of them?
Right now, people are still overbidding houses right now, at least more than like 15% to 20% of the asking prices. That's still happening that I know of. Also, some of the high demand area, the base price or the asking price of the house is going up like even 12% every year on top of additional 15 to 20% over asking price. So this is a lot of money that people should be aware, where if you look at the indexes, the average grows about 8 to 12%, like stretching over the decade. So something for people to really consider about. Yeah.
So what is the average appreciation in the Bay Area been like, say, over the last 10 years? Do you know?
I would say, like, I'm looking on the average, it is somewhere between, I would say more than 10% on the average. So a lot of people think about like, oh, I'm gonna do something with the index fund or so, right? Depending on which area that you might not able to reach your goal. So, you might have to think about like, instead of just relying only on putting money on investment, you might want to think about how can you save more money. You might need to hustle maybe a couple, another job, or you might have to think about how you're gonna get a promotion in your job or try to get an additional bonus.
Get to your goal.
Yeah.
So it sounds like if the average appreciation over the last 10 years in real estate has been about 10%. That seems kind of similar to a lot of the indexes. I guess you said between 8 and 12, right?
Yeah.
But the difference with real estate is that this is something you can move into. So like
it's tangible.
You're accomplishing 2 goals with it. You're investing in something that is going to appreciate over time, which brings you more money, and you're finding a place for yourself to live in, which is why I'd say, as a real estate advisor, overall, it's good to purchase the primary residence that you live in. It's something that is appreciating while you get to enjoy living there.
Now, listen, I keep mentioning about 3 to 5 years. I do want to mention about what happened like in 2 years. About 2 years, another critical time to think, because when you're looking into financing your house, usually a lot of mortgage broker or banks, they look at 2 years of your financial statement, meaning your job. They want to see how much you make for the last 2 years.
Tax returns.
They look at 2 years tax return. They also look into, have your income been appreciating, or does it has to be going down? So when I purchase a house, I will say, hey, before we start into it, what is your 2-year financial looks like? Make sure that within that 2 year, you want to show that consistent income.
Right, exactly. Your financial picture, that's very important, is making sure that looks good. It's tight, your income is good, your credit, all that kind of stuff.
Also, for the people that I work with, that during I remember like for the past couple of years, since housing market is so competitive, that usually a lot of seller, they want to see who can actually get the loan, and who can, if they accept the offer, who can sell their house fast. So one of the things that having a mortgage advisor or a financial advisor to help you coach you in your financial is that when you're ready to make an offer, you have your pre-approval ready. Then when the seller able to accept it, have a leverage telling the seller that I can close the loan fast.
I've been thinking about lately about finance, and this is totally off topic about what we were talking about. But have you heard anything about stagflation? Like,
yes, I have.
Thrown around in the media lately?
Yeah.
What are your thoughts on that?
So stagflation is that, like, you have any questions about stagflation, you definitely can reach out to me and we can talk to individually more about it, how stagflation affecting you. But basically, stagflation is that where the economy is not doing well, also have like a high inflation as well. So these are the things, it is pretty scary, okay? Like, not a lot of people knows about what happened, and everyone just listen to the news, just guessing like, oh, this is what's gonna happen. And remember, these are our experts just giving you data, how accurate are these data that we, it could be very close, but it's not, I won't say that you rely on it 100%. So if you are still looking for a house, in the next couple of years, you definitely want to talk to a financial advisor and the real estate agent.
Yeah, and I just want to hop back in just because I bring up this term because it's something I saw in the media recently, and whenever it's a financial headline, it's always like stagflation, like it's a headline that is almost designed to instill fear in people. And so I want to make sure that I'm not doing that here. Technically, when the GDP numbers came in recently, they were kind of underwhelming. So like the growth of the economy is not very good, and then inflation didn't come down as much as the Fed thought it was going to.
Exactly.
So that's really kind of like a base definition of stagflation, is like inflation and the GDP is not growing very aggressively. But when you compare the numbers right now to the numbers in the last time this happened in the US, which was the 1970s, right? The numbers were worse. So like, I think the growth of the GDP was even lower, and then mortgage rates, interest rates were a lot higher. I think they were probably around like 12% or something like that. So like right now they're the average 30-year fixed mortgage is at about 7.5%, which is way lower than 12%. That's like 5% lower. So
I do want to calm people's mind about this situation is that of course when you listen to a lot of media, they do want to tell you, they do inject a lot of fear for people, but
it's clickbait. It's to get more clicks.
Well, the media just want to inform you. They just want to let you know what happened, but really the fear is really of you, not it's yourself, because you might not understand it. And you start second guessing. You might think the world's in, but it's not. The place we're living right now seems really bad with stagflation. What about other countries? How are we comparing to other countries? Some countries even having like slow GDP. Some places even have a negative GDP. Some places have inflation, which is pretty low. I won't say it's not a desirable situation right now, but you also want to see, compared to other places, how bad are we really? Let me ask you another question. Given the economy situation, where else would you rather be?
Japan.
Like Japan, but you think about, like right now, if you take the U.S. currency to Japan, we spend pretty good. But what about the local Japanese, right? They're having their own struggle too.
He was saying just now, in a way, which is that when it comes to real estate, really the main reason people buy is because they usually want a place to move to. And so, there's all this speculation you can do. There's a lot of real estate investors who analyze the markets and, have projections about when exactly prices are going to come down and stuff like that. But I've seen so many different projections over the last 5 years. People thought the market was going to crash in 2020 because that's when COVID came. Guess what happened? interest rates came down to like 2%, prices shot up.
Yeah.
The average appreciation in 2020 for the whole US was, I think it was above 20%. In a place like Austin, Texas, I think Austin, maybe in 2021, it appreciated like 40%. I read that somewhere. Every year, 2020, people thought it was going to crash. 2021, people were like, wow, 2020 was crazy. It's definitely going to come down now. Guess what? It went up like 15%, 20% more again. 2022, similar thing. I think it was less, maybe like 10 or 12%. And then 2023 even, it still appreciated like 4%. So there have been speculators saying that it's going to crash for multiple years now, and it just keeps going up. And then like the general sentiment right now is like, okay, interest rates are elevated. The average 30-year fix is about 7.5%. Inflation hasn't come down to the 2% goal that the Fed has set. And so it's kind of like unclear whether they're going to do another interest rate reduction this year or not. I think the latest thing I read was that they're still planning to probably do an interest rate reduction in around September.
We'll see about that. Like personally, okay, I'm not confident about that until I see the CPI go down. But that's just me though. So I would, if you are worried about the inflation and the interest rate or so, talk to your financial advisor, or even talk to me. So you might think the interest rate is high. Get the house first. At least you have a place that you can be happy, you can live with. Maybe you couldn't afford it right now, but it's okay. Get the property because it's still an investment. Then 3 to 5 years, you might want a little bit more money. You might want to move on to something, another house or so.
Yeah.
Or you might want to, you like the house you like, but the interest is high. You might want to do a refi.
Yeah, and this is why like I want to do a podcast like this, because there are so many options, and people, our school system doesn't teach people about any of these things related to investing in real estate. So people they don't know where to get started. They don't even know like what type of questions to ask, and so it just becomes confusing. It becomes like something that seems unattainable. So a lot of folks that I actually even know, like they just don't even have a goal to become a homeowner because it just seems like something that's so insurmountable and like too complex, too complicated, too many steps involved to even like try really. And so people get kind of like froze in that state. And this is why I wanted to start providing more information so people understand that there are options out there. But going back to another point that I was making earlier, what I was trying to say earlier is basically you can do all this speculating that you want. You can look at all the numbers, you can look at the graphs and try to predict exactly when home prices are going to come down or go up. But that's pretty much always a losing strategy. And I've seen clients that I've actually worked with in the past where, we were looking at homes and there were definitely some homes that they could afford that were within their price range. And maybe it wasn't perfect. Maybe it wasn't like check every single one of their boxes on the list, but it hit a lot of the main ones. And they still were like, okay, no, prices are still going to come down. Like, I'm going to keep waiting. And, I'm not the pushy type of realtor. So I'm like, okay, I'm just going to give you all the data and I'm going to let you decide on what is best for you. A couple of different clients were like, okay, this one checks off some of the boxes, but it doesn't check off everything. So I'm going to keep waiting because I think prices are going to come down. And, my response is always like, yeah, I understand, maybe where you're coming from, but in my experience, trying to time the market is usually a losing strategy because, this was like I'm referring to a specific situation. This was probably in 2022. I was like, the last couple of years, everyone thought real estate prices were going to tank each year. And they've only continued to rise aggressively. So like trying to time that is it's not a great idea. And, what happened to that client is ultimately she was priced out of the market because she had a certain budget that she was okay to work with, and we were utilizing a first-time homebuyer program that was going to give her 20% for a down payment. Would not have to pay back if she never sold that house and lived in it as a primary residence. That was the California Dream for All program. But essentially, we saw quite a few homes that were maybe not perfect, but they checked off a lot of her boxes, and she just decided not to pull the trigger on any of them, and ultimately she got priced out of the market. And so at this point, she may not even be able to buy anything for quite some time unless her job situation changes and things like that.
Two questions about the same client. Assuming that she did not get priced out, right? Assuming that she liked the house that she get, do you think that, even though she waited for the market to go down, do you think she'll find another house like it?
No, because every house is unique. Every house
Exactly.
is going to be different. It's in a different location. It has different features. You know, maybe it has like a partial view, or maybe it's close to a BART station. Like every house is going to be different. So
Sure.
that is something that you got to keep in mind. But yeah, I felt really bad. Like when I saw that happen, I was like, because I knew that client really wanted to buy a house, but there's all these like headlines out in the media, like, oh, prices are going to come down this year. And it may be true, it may not be true. So it's,
I mean, a lot of media, they're playing guessing game. You know, they're guessing because based on data, based on what they see. But ultimately, you know, if it's that easy to predict, you know, people like me and Weston and also the economists, we don't shop anymore. So where, you know, all these data just telling us what to see, but how are we gonna deal, you know, what are we doing with those data and how are we preparing for it in the future? You know, that's our job to help the individual to reach a financial goal.
yeah, well, I feel like we covered a lot today, man. So
Yeah.
I want to thank you
Sure.
for stopping by. Always
Sure.
good to see you. You guys out there, if you have any other questions about finance, taxes, real estate, we're going to try to do these podcasts more frequently. So please send any questions that you have. Feel free to subscribe. We're going to try to put out content every week or two. And looking forward to seeing you guys in the next one.
Great. Looking forward to the
To the next one.
I'm looking forward to, you know, to be back in this podcast as well.
Absolutely. All right. See you guys later.
All right.